3 years ago, China surpassed the US to become world's largest manufacturing country. 3 years later, China's manufacturing output surpassed US by almost $500 billion. That is a big number.
Broadly speaking, if we had to categorize China's manufacturing evolution, I would put it into 6 categories. Companies coming over here to find cheap product. Trading companies emerging as a way in which to manage some of the source of suppliers. We started to see the development of manufacturing facilities here when they recognized it's time to sell into the local market as well, supplying the demand that was obviously growing at quite a quick pace. Made in China for China stage. And that's where we sit today. Many multinationals operating in China from a manufacturing presence perspective are doing so predominantly not for export, but for the local market. Competing in a developed China manufacturing environment.
Over the past 30 years, huge amounts of money flowed into China caused dramatic change in the market. We're probably familiar with the labor cost increasing level of competition, the more mature market. However, if we look at the macro level, the government is also pushing very hard for the industry innovating, upgrading. That may put a very different name and definition for made in China in 5 to 10 years. If you look at the manufacturers themselves, we also observed in the past 10 years that they are innovating really hard. In one hand, they are no longer satisfied with the low margin, the low brand awareness in the global market. They're investing tremendous amount of money into the R&D, into the brand building in order to compete equally with these MNCs. And they also innovate downwards to the distribution channel, which is considered a key winning factor for any business to play successfully in China as a huge geographic market.
Obviously, raw materials and labor is becoming so cost preventative that it's hard for companies to compete in such a developed market. So many companies are looking at supply chain and trying to become a little more competitive, and that's taken on a number of forms. One, we might see companies starting to evaluate a China plus one strategy, looking at other markets within Asia Pacific, such as Vietnam, Malaysia, Cambodia even, as other manufacturing or sourcing entities. Labor's cheaper, yes, but politics sometimes are riddled with issues that make it more difficult to work in those countries. And clearly you'll never achieve the same scale as what you can often find in such a grand country as China. Another option is go west. China is continually trying to push development further into inland areas outside of the typical coastal regions where most multinationals set up facilities, and this has also developed into a larger playing field for multinationals, but it hasn't really gone as far west as many had hoped in the main parties. And of course, you've got the other less attractive alternatives, which is do nothing, as well as abandoning China, which most multinationals are not willing to do. The theme today in China amongst manufacturing is what we refer to as the new normal. It's no longer as cost competitive. Growth rates, while slower, are by no means at low levels that we see in other developed markets. But what we all need to understand is that operating in China is not going to bring the same level of extreme growth that we once acknowledged and received and enjoyed that we saw in the late 90s and early 2000s.